SMF Street traders, welcome. Today's date happens to be 9/14 of 2010, and we're updating our worldwide network and our foreign traders, which everyone from every country in the world can be on SMF Street. And one of the things that SMF Street did long before Goldman or JP Morgan or any of them out there did was we took the growth rate down, folks. Before the year started, we said year-end growth was at 1.5%, if not lower, moving forward. Forget about the election. Forget about the gimmicks. Forget about the short covering. We're going in to the earnings season in October of 2010. From the very bottom of this chart, when we were way down, earnings were re-leveraged for about 6 quarters, and we were long during that whole time. And in selected areas, in selected sectors of the market, that growth would be higher because of the re-leveraging process, and people would be spending money around the world. Let me tell you that the United States growth is going to be, as I have said, forward-looking. 2011, 12, and 13, you're going to have a lower growth, which means that we're going to be in professional trading ranges on all of the indexes and sectors, and we're going to be range bound within that growth pattern in the S&P 500 earnings. Where the S&P 500 earnings were down here was a place to buy them. We shorted them when they were, S&P earnings were right about $120 up here. We said that the wholesale was at $55. Well, guess what? Over many months, it all happened right here. And when those earnings on the S&P 500 got down to a wholesale growth rate, you had these big moves. Let me tell you something. There's a big downside here, folks. And over the next several quarters, not everything will collapse. We said in the last quarterly earnings in July that we would peak, that the earnings would be good, and they were darn good. Nothing wrong with it. But we were selling short, and stocks were selling off. Intel, perfect example. Gave upside guidance, executed well. We sold short that thing in after hours at 22.70. Look where Intel is today. Look at where Cisco is. Not only that, the CEO of Google came out today and said, look, growth is going to be a lot slower. They're all way behind the curve. There's a difference between the true value of earnings, and there's a difference between Wall Street mechanics during live trading days. Floor traders have got theirs. Retail has theirs. That's retail investors, like most people. The thing about that I want to tell you is that lower growth later on, there's a big floor. There's a big hole here, down below here. And basically, as we move in the October, the earnings value and what companies report and guidances that companies give are totally different than how Wall Street tries to pirate the shorts out. And you got these bear and bull scraps. You know, we teach everyone that here. What I am trying to tell you is that U.S. growth goes lower. That makes that, look, U.S. growth, when it was growing off of the re-leveraging process, we had the great move. But look, what took it up takes it down. Is it going to happen in one day? I never said that. What I am saying, forward looking, starting in October, we will start to see where some of the earnings and some of the guidances won't hold up. That means that Cisco John Chambers came out. He said, hey, it's lower. Not only that, Intel, who had given the upside guidances, comes out a couple weeks ago and says, oh, we got to drop our forecast. And so did Texas Instruments. This is just the beginning, people. Okay? So basically, you got to understand, for the retail investor, if you're watching this, and the IRA and the 401k holder, you better get on over here right away. And the thing about it, SMF Street is a leading firm as far as we are concerned, because we have all the live videos on our website. We point the events out before they happen, not afterwards. And how do you make money? I'm telling you that there's a big hole. The upside that they're trying to get, the bull tries to use all of these inside backdoor mechanics behind the scenes that 99% of investors and even traders, they don't even know what that is. Well, after being around 30 years in the business, we just have had the experience on a daily compounded basis, on a weekly and monthly and yearly basis of understanding what the gimmicks and what's behind that door. And D needs to know what those are, Main Street, because you do. And it's unfortunate that it's been hidden and has always been hidden so well that people don't know. They miss that move because they're petrified when they're down here. Then up here, the growth rate that created the growth rate off of the bottom is that all the stimuluses are wearing off. Look at the election trade. Who's going to be a Democrat? Who's going to be a Republican? Who's going to be this? Who's going to be that? It's all irrelevant. Those are actual just intraday market moves and volatility. And I want to separate volatility with reality. Volatility is market volatility. Earnings reality and growth rate is a different reality that will catch up to these markets. And the re-leveraging growth took it up, and the deleveraging growth will end up failing as we start moving the next couple of quarters. We have took the growth rate down. We were well ahead of this a year ago. Just like we were well ahead of it over here. We got the blogs, we got the live videos, we got the live trades, we got the live analysis. We're here to help you. We're not here to sell you nothing. If you want to get involved in our 52-week school, you want to learn about economic indicators, you want to learn about earnings season, you want to learn about earnings growth, you want to learn about how to be a market maker as far as trading and taking gains and knowing when to be short, knowing when to be long, well, our door's open to you. We even fund your trading account with our own money. Go find that. We have a platform that we have